India's biggest stock exchange is finally going public. But here's the twist nobody saw coming. NSE cannot list on NSE. Its shares will trade on its biggest rival. And the company itself, it receives 0 rupees from this IPO. 10 years of drama, 1 filing, and 3 things every investor needs to understand.
Let's rewind. December 2016. NSE files its first draft prospectus with SEBI, planning a 10,000 crore public issue. Then everything freezes. The co-location controversy erupts, allegations that some traders got faster access to the exchange's servers than everyone else. Years of investigations follow. In June 2025, NSE files the largest settlement application in SEBI's history, 1,387 crore rupees to close the co-location and dark fiber cases. That payment cleared the biggest roadblock. In February 2026, the Delhi High Court dismissed a petition challenging SEBI's no objection certificate. And finally, on June 17, 2026, NSE filed its fresh draft prospectus, setting up the largest corporate listing in Indian history at an estimated 30,000 crore rupees. Bigger than Hyundai, bigger than LIC's offer size ambitions. 10 years, 1 settlement, and the door is finally open.
Now, the question everyone asks first, why will NSE shares trade on BSE, its direct competitor? The answer is a rule, not a choice. A stock exchange cannot list on itself. Think about the conflict of interest. NSE monitors every listed company for compliance, disclosures, and violations. If NSE listed on NSE, it would be its own regulator, its own judge, and its own police. Regulations require self-listed exchanges to be supervised somewhere neutral. So the only main board alternative in India is BSE, which creates one of the most ironic moments in Indian market history. Asia's oldest exchange will host the listing of its younger, larger rival, and BSE earns listing fees from it. Every trade in NSE shares happens on BSE's platform. Competitors and now landlord and tenant.
Here's the myth to bust today. IPO money goes to the company, right? This time, wrong. The NSE IPO is a 100% offer for sale. In a fresh issue, a company creates new shares and the money funds its growth. In an offer for sale, existing shareholders sell their old shares and every rupee goes to them, not the company. NSE receives 0 from this 30,000 crore issue. So who's selling? State Bank of India is the largest seller, offering around 2.5 crore shares. LIC holds the largest stake at about 10.7%. Global names like Morgan Stanley and Canada's pension fund are trimming positions too. In total, existing shareholders are diluting roughly 6% of the company. Does zero money to NSE make this a bad IPO? Not necessarily. NSE generated over 10,000 crore rupees in profit last year with a 55% margin, more than double Nasdaq's. It doesn't need your capital. The IPO simply lets early investors exit and lets you own a piece of the machine every Indian trade runs through. But knowing where your money goes, that's the difference between investing and guessing.
Now the part that matters, your portfolio. Group 1, you already hold NSE unlisted shares. They've been trading around 1950 to 2050 rupees in the private market. Here's what most people won't tell you. There is no real grey market premium yet because the price band hasn't been announced. Anyone quoting you a confident listing price today is guessing. What you should actually check, the lock-in rules that apply to pre-IPO shareholders after listing, and your own cost basis. Group 2, you're thinking of buying unlisted shares now, before the IPO. Understand the trade-off. Your capital gets frozen in an illiquid asset while waiting for a listing that has a deadline but no confirmed date. That's opportunity cost. The same money in liquid large caps stays flexible. Group 3, you'll simply apply in the IPO like everyone else. Then your job is patience. Wait for the red herring prospectus, the price band, and the valuation math. We will do that breakdown together on this channel the day the band drops. No predictions today, just a framework, because this is education, not investment advice. One more thing that makes this IPO unusual, it has a countdown timer. SEBI's no objection certificate requires NSE to complete the listing before January 30, 2027. Miss that window and the exchange may need fresh approval, restarting parts of this decade-long process. That's why the street expects a listing before the end of 2026. So here are the 3 announcements that actually matter. 1. SEBI's observations on the draft prospectus. That's the regulator's green signal. 2. The red herring prospectus with the price band. That's when real valuation math becomes possible and when a genuine grey market premium appears. 3. The IPO dates and lot size. Everything before these 3 is noise. Save this video and when announcement 2 drops, come back. Part 2 of this series will break down the valuation live.
The biggest IPO in Indian history deserves more than hype. It deserves understanding. The moment NSE announces its price band, Part 2 goes live on this channel with the full valuation breakdown. Subscribe so you don't miss it. Drop your questions below and I'll answer the best ones in Part 2. This was Stock Market Decoded. Trade smart, stay curious.